Good morning, Paul Handerhan here. I'm the president of FAIR, the Federal Association of Insurance Reform. We are a nonpartisan, nonprofit national trade organization that focuses on insurance reforms to create a robust and competitive marketplace with a very consumer-centric lens. I've been in this industry for over 20 years in property and casualty. I've been following the Florida market for a number of years and very well versed on all the stakeholders and a number of the market disruptions and problems that are, challenging today's marketplace. Obviously, I'm very sympathetic to homeowners who are getting rate increases in the mail. Inflation's going up, insurance is going up. Everywhere you turn, it seems like, your dollar is not stretching as far as it used to. So that can be very frustrating for consumers. So it's not only from your primary insurance company who you have a contract with, but it's also the reinsurance that primary insurance company has to buy. Those costs are going up. So when reinsurance costs increase, unfortunately, your primary insurance company has to pass those increases on to consumers. So Florida is suffering from a number of cost drivers that is affecting the marketplace. And obviously, there's two things that are being affected, right? The availability of insurance and the affordability of insurance as well. Some of the cost drivers are based upon just an increase in weather events. Now, those weather events are, catastrophic events like hurricanes, but they're also non-catastrophic weather events like increased frequency of hailstorms, tornadoes, straight line winds. That's been impacting the marketplace. In tandem with that, we've been seeing an increase of suspected fraudulent claims, HYPER-SOLICITATION. So the very frequency of the number of claims that have been filed has been going up every single year. And that has been impacting the underwriting results of the Florida domestic insurance companies here in Florida. Basically, over the past, I would say 4 or 5 years, they've been showing underwriting losses instead of profits. It's a very contentious issue on both sides. You'll have, some in the trial bar that say the litigation is due to the fact that insurance companies aren't paying claims, legitimate claims fast enough. You see insurance companies saying that there's a number of third parties that are inserting themselves in the claims process, that are filing, illegitimate claims, soliciting. The truth is, there's probably an element of both. All insurance companies are not created equal. So some insurance companies do a much better job of their claims handling than others. But from a fraudulent standpoint, I think that there's, agreement across, most of the stakeholder groups that, yes, there are a number of third-party contractors who are going around knocking, door to door, telling homeowners that they can provide services for them to help them get money from their insurance company to do a whole host of types of restoration projects for their home. Now, if you're a homeowner, just think about that. If somebody knocks on your door and says, hey, listen, I just got your neighbor a free roof, or, you would qualify for a free kitchen. I've done it for a couple of your neighbors within your neighborhood. And it's not going to cost you anything. We'll handle the whole process for you. That seems very attractive to a homeowner, obviously. They have no skin in the game, no risk. Why not try it? The problem winds up being, and I'll just give you an example with the roof. If I go into a neighborhood and all the roofs are 10 to 15 years old, chances are there is some type of damage on that roof, right? Some type of, potentially wear and tear, some type of maintenance, or potentially even some weather event that happened at some time in the past. Unfortunately, though, what happens is these solicitors many times will go on the roofing structure and they'll find any of these types of damages and immediately try to associate it with some type of weather event. And then they go back into the weather archives, just look for an arbitrary date where the winds were at a certain severity level and say, okay, all this damage is associated with this weather event. Now, if you're an insurance company, it's very hard to disprove that, right? So that roofing company will sign an assignment of benefits. They'll submit it to the insurance company. Usually the estimate for the replacement of the roof that they submit is usually, overvalued based upon what market prices are. But if they don't pay the full amount, the next thing you know is they're getting hit with a lawsuit. At that point, it's very difficult to defend against these type of cases. And ultimately, by the time, the attorneys get their fees and costs and the homeowner winds up getting paid the indemnity, it's a huge cost on the insurance company. And as those type of claims have been increasing in frequency, that's why you're seeing policyholder surpluses eroding on the fraud side. Now, there is some issues for insurance companies that get actually hit with a legitimate loss, right? Let's say a hurricane comes in and impacts, a certain geographic region, affects policyholders and affects that insurance company. Well, that insurance company has what's called usually a retention or a deductible before their reinsurance kicks in. And the insurance company has to pay those losses out of pocket first before they get into the attachment point of their reinsurance program. For some of our companies, they've gotten hit with a number of these type of storms, right? So they're paying, multiple retentions or multiple deductibles, which has also eroded their policyholder surpluses. And then also they've been hit with these non-catastrophic weather events like we talked about before, hail, tornado, straight line winds. And those sometimes are not covered by reinsurance treaties, which means it comes completely out of the insurer's policyholder surplus. And since you've had this kind of spike in these claims that weren't based upon their historical data, they didn't have a chance to prepare or to budget for those losses. So all that is impacting the rates. And unfortunately, all those claim costs every single year go into the rate filing, and ultimately all consumers have to pay those costs.